Warren Buffett's investing tip number 2. Focus on long-term value. Intrinsic value. Intrinsic value is the true worth of a company based on its fundamentals, independent of its current stock price. Buffett emphasizes estimating a company's intrinsic value by examining factors such as earnings, dividends, growth prospects, and overall financial health. This often involves using discounted cash flow analysis or other valuation methods. Sustainable competitive advantage. Look for companies with a durable competitive advantage, often referred to as an economic moat. This advantage could come from brand strength, patents, network effects, cost advantages, or high switching costs for customers. Businesses with strong moats are more likely to maintain profitability over the long term. Consistent earnings and growth. Focus on companies that demonstrate consistent earnings and revenue growth over time. This consistency indicates a stable business model and reliable management, which are critical for long-term success. Investment horizon. Long-term perspective. Buffett advocates for a long-term investment horizon, often suggesting that the ideal holding period is forever. This means buying stocks with the intention of holding them for many years, allowing time for the company's intrinsic value to be realized and for compounding to work its magic. Avoid short-term market fluctuations. Ignore short-term market volatility and focus on the underlying business performance. Stock prices can be influenced by market sentiment, macroeconomic events, and other factors that don't necessarily reflect the company's true value. Patience and discipline. Patience is crucial in long-term investing. It may take years for the true value of a company to be recognized by the market. During this period, it's important to stay disciplined and not be swayed by short-term market trends or negative news. Evaluating companies for long-term investment. Quality of management. Assess the competence and integrity of a company's management team. Effective leaders with a clear vision and a strong track record of making wise strategic decisions are essential for long-term success. Reinvestment and growth. Evaluate how a company reinvests its profits. Companies that wisely reinvest in their own growth, such as through R&D, expanding operations, or acquiring complementary businesses, are likely to enhance their long-term value. Financial health. Analyze the company's financial statements to ensure it has a strong balance sheet, healthy cash flow, and manageable debt levels. Financially robust companies are better positioned to weather economic downturns and capitalize on growth opportunities. Benefits of long-term investing. Compounding returns. Long-term investing leverages the power of compounding, where investment gains generate their own returns over time. Reinvested dividends and earnings contribute significantly to overall wealth accumulation. Tax efficiency. Holding investments for longer periods can be more tax efficient. Long-term capital gains are typically taxed at a lower rate compared to short-term gains. Additionally, frequent trading can incur higher transaction costs and taxes. Reduced emotional trading. A long-term focus helps mitigate emotional trading decisions driven by fear or greed. It encourages a more rational and measured approach, reducing the likelihood of panic selling during market downturns. Practical application. Research and due diligence. Conduct thorough research to identify companies with strong long-term potential. Read annual reports, listen to earnings calls, and stay informed about industry trends and competitive dynamics. Buy and hold strategy. Implement a buy and hold strategy, where you invest in high-quality companies and hold onto them through market cycles. Resist the temptation to sell based on short-term market movements. Periodic review. Periodically review your investments to ensure the companies you hold still meet your long-term criteria. However, avoid making frequent changes based on short-term performance. By focusing on long-term value, investors can build a portfolio of high-quality businesses that compound returns over time, providing a more stable and rewarding investment journey. This approach aligns with Buffett's philosophy of finding and holding onto valuable assets, allowing them to appreciate in value as the underlying business grows and prospers. Click the link below for more investment tips.